Hey everybody, thank you for joining us today. We're here doing training or information. We're trying to give you guys enough content, and today we have a couple special guests, but our first special guest is the infamous, the famous Lily Tran, who I admire for a long time from afar. And now we have the pleasure to have her with us. Lily, thank you for coming.
Thanks, Gary.
I wish I had an applause I could play. But you know, like I said, I thank you for giving us your time. Now we're all virtual, so it makes it a little bit easier to get out to everybody content and for our group. This is for our Alliance group, our Facebook group. We're trying to give them content every week and come up with different topics, different people that are doing things within the group. So co-ops, that's the topic of the day. Lily, you made a fortune on co-ops, right? So tell me how you did it, and how'd you get into co-ops? Everyone's running away from co-ops. How'd you pick co-ops?
I didn't specifically choose co-ops. We are located in Queens. Our dominant market is Queens, and we are surrounded by co-ops. So I knew that we had to learn how to list and sell co-ops in order to survive.
Okay, so co-ops is usually like, I talk to agents, 8 out of 10 agents are scared of co-ops, I know not in the Forest Hills office, not at all.
No.
But most offices I go to, they steer away, they are scared to look at it. What's your system? What do you do when you first see a co-op? Do you
I think there's misconception with co-ops. I think a lot of people who are afraid of co-ops may not just, they might just not be fully aware of how to qualify or how the process goes, but there's so many of them, more co-ops than houses, and your ability to, handle multiple transactions at once when you get in good relationships with management companies or the board, you're able to sell multiple properties at once. But I'm sorry, what was your question?
So basically, with co-ops, are they?
How do I start?
Yeah,
right?
where do you start? Do you have a system in place? Do you have a package? Do you know the boards? Like you're saying, the boards, right? A new agent has their first co-op deal, and they're like, where do I start? What do I even look at?
I think in the very beginning, once you have that buyer lead, you need to qualify. Immediately. There are so many rules with co-ops, very different from co-ops. And many times when we get calls from buyers, sometimes they'll just say, don't worry about it, we're pre-approved with the bank. And we unfortunately have to let them know, it's great that you took that initiative and got pre-approved, but are you aware of the fact that banks approve at a completely different debt to income ratio compared to co-ops? Right? So just because you're pre-approved with a lender doesn't necessarily mean that you're going to pass the co-op board. For example, majority of the co-op boards in Forest Hills approve on anywhere from a 28 to 32% debt to income ratio.
Okay. Right? And do you do the calculations with them, or you just basically
we try. I mean, when you're speaking to buyers on the phone, many times they're reluctant to provide information. Correct.
Yeah.
And you can't just straight out ask a buyer, oh, you want to see this co-op? Okay, what's your income? Right? Nobody's going to share that with you. But if you're more, I guess, professional with how you deliver your question, you can say, by the way, are you familiar with the co-op board approval process?
Yeah.
Okay. And you can take it a step further and say, are you aware of the fact that this particular building approves on a 28% debt to income ratio? Do you know where you stand?
Yeah. So
and a lot of times they
questions, right? To get these answers coming in, right?
Yeah. And sometimes once you get that far, they'll say, you know what, I don't know where I am. Can you calculate for me? And we'll do, I'm not going to tell them to send tax returns immediately and all of that. We can have a buyer consultation at the office if they choose to, but they should be fully aware of the fact that they need a certain debt to income ratio. Sometimes if they're asking, hey, is this building a 10% down building? Is it a 20% down building? It should trigger something in your mind that, down payment might be an issue for them.
Yeah.
right? And they also have to know that after the down payment, a lot of these boards still need you to have at least 1-2 years liquidity, right? So after, let's say you're 20% down, you need 1 year of liquid assets.
Yeah, I think that's the important part, right? Because people look at, buying a house, you look at that 3.5% down, your closing costs, but that's not enough.
No.
It just gets you a house, but a co-op, you need that. They want to make sure you're stable enough to last a year.
Yeah, absolutely. They're going to look at your tax returns, your full tax returns, and we will proceed with that once, let's say we verbally approve the buyers on the phone. They come in, they provide us documents. We check everything in the tax returns. We see how many dependents they have. That actually matters too, because you can't buy a 1-bedroom and have 4 occupants. The board's going to reject you.
Yeah.
Right? So all of that matters. There's other sections in the tax return. If you have multiple rental properties, that could be also frowned upon by the board because they don't want investors.
Yeah, definitely. And they don't want absentee owners, right? If your kid is 18 and is going to live in the place, it's not the greatest situation for them. Right?
Yeah, I mean, in terms of, let's say,
I'm living in Florida. My son's here, 18 years old, but the co-op is going to be under my name.
Not every co-op is going to be okay with that, because if you're on the stock and lease, but you're not living in the unit, sometimes they consider it a sublet, even if it's your child, right? So in situations like that, they might require that it's a co-signed situation, but it depends on every board. Every co-op is different.
Yeah. So this is not to scare everybody, but yes, there are so many ins and outs that you have to look at when considering when your client considering a co-op. You don't want to steer them away, but you just want to educate. I think educating them and being the professional and being the one that's giving them the professional advice is the key, right? But you did this for years. Your team members that come on board, I know it's a learning curve for them as well, right?
Yeah, and some of them get it right away, but learning DTI, learning debt to income ratio, how to calculate qualified buyers are like the ABCs of co-op, right? Yeah. So if you don't know how to qualify the buyers and you're running around showing buyers properties, you could be wasting a lot of time. You're showing them the wrong properties. Other things that matter also, if you know that your buyer's debt to income ratio, I'm sorry about that background noise. Okay. Your buyer's debt to income ratio can't surpass a certain amount, right? Yeah. So some buyers, they'll call us and they'll say, I don't want to spend more than $400,000. And, after calculating their debt to income ratio, you could actually, inform them that, what if we're able to find something that matches your requirement and it's $425,000, but maintenance is significantly less, right? So there's a direct correlation between price and maintenance, where your total carrying charges could be the same amount if maintenance is significantly lower, but price is higher. So finding out where that buyer's threshold is, where their debt to income ratio is, matters significantly, because it opens up a lot more opportunities for the buyers, right? Yeah. Otherwise, you're not showing them certain properties that they potentially could be qualified for.
And correct me if I'm wrong, maintenance is usually higher, prices are lower.
Yeah.
Right?
Usually that's the case, because buyers will look at total carrying costs, right? So if your maintenance is significantly high, usually you need to drop the price.
Yeah. So maintenance, usually what's tax deductible on that maintenance?
Usually the property tax and the mortgage interest that the building holds, right? And I'm sure, Arun can go further into it when he comes on, but yeah, when they say 50%, it's not 50% of the maintenance.
Yeah, because I know usually most agents say, 50%, and use that as a rule of thumb. So that's definitely one of the myths, right? So I should stop saying that. No. So maintenance, and so you're calculating DTI, you're doing all this stuff. That's on the buyer side. What about, you do most of the listings? So tell me about the listings. When you get that listing packet, you're going to sign up. Are you asking them for stuff? See if they have stuff on hand. What are you doing on the listing?
When I'm going on listing appointments, I usually want to provide information to the owners ahead of time. Some owners don't know that they have flip tax. Some owners don't know the fees that they have to pay, right? So flip tax, for those of you who are unaware, is a tax that sometimes co-ops will ask sellers, majority of time sellers, to pay. I know of one building in Forest Hills that actually asked the buyers to pay. But they should be fully aware of all the fees, all the taxes that they're going to have to pay at the closing table.
So the flip tax, is it, it's buyers don't really see it, as a discouragement. How should we talk to buyers about that flip tax?
Yeah, so I've had buyers call or come through open houses, and they'll ask questions like, what's the sublet policy? What's the flip tax? And when I provide them an answer, they're like, no, we only want buildings that have no flip tax. So as realtors, you need to educate them that flip tax actually could be a positive tax that a co-op imposes on shareholders, because they're cushioning their reserves, right? So you need a co-op that has reasonable flip tax. I know of certain co-ops that have extremely high flip tax. Yeah. So when you're selling, you're paying them like 10% of your profit, let's say. Yeah. But many co-ops, they'll just have certain dollars per share or a certain percentage per share.
Okay.
Percentage of your sale price. But what happens is that tax is given to the co-op, and they're cushioning their reserves, so that when they need to do any type of improvements, for example, you see a lot of scaffolding around co-ops because they have to, do the facade work for local law 11. Okay. And things like that. You're not getting significant maintenance increases, right? They're tapping into the reserves and they're paying for these improvements. And if a building doesn't have flip tax, what I've noticed is that maintenance just keeps going higher and higher and higher. And what essentially happens is you're losing your value. You have to sell your property for a lower price if your maintenance is significantly higher.
So when my buyer says, oh, it has a flip tax, be like, that should be a good thing, because that could help your maintenance stay steady.
Correct. If it's a reasonable flip tax.
Yeah. Yeah. If it's too crazy, then they're just being out of control. Right? Okay. So how do you even market for these, a new agent? How would they market to get a listing for a co-op? I know you can't just door knock like a normal house, right? So what do you do what do you suggest agents do?
They could still call, right? So let's say, we just listed something. Our team can actually call the building and do a just listed script. Or if we put something under contract, you could use the just, under contract script. Or any open houses, invitations, to the open house.
Okay, that's good.
We'll get into scripts next time, but yeah, there's scripts for everything.
Yeah. All right. So I know, like I said, I thank you for all your time. Do you think there's anything, leaving words that we should just be aware when we're doing a co-op? What's the first thing?
You need to learn debt to income ratio. You need to learn how to qualify. You need to gather all the documents that the buyer has, and that includes tax returns, that includes pay stubs, full credit report, not just the credit score, because you need to know what their recurring debt is in order to calculate what their debt to income ratio is. If you qualify the buyers well and you work co-ops efficiently, I think co-ops are a great way to increase your business, right? There's definitely a lot more co-ops. And the crisis that we're facing right now, I think it's easier to sell lower end co-ops, than homes right now.
Now, do you feel like in what we're going through now that because co-op boards are so much harder, right? That you're gonna the people that are in industries, 1099 industry, right? That's not stable W-2. Nothing stable right now, right? But do you see any fluctuation with that? Any difference?
Boards will look at the total package, right? So they will look at, let's say 3 years of your tax returns or 2 years of your tax returns. And if your employment, if you're 1099 and you're consistent, and they see that you do have a steady income, plus you have a hefty reserve, they'll definitely approve you. I mean, it's just the overall package, right?
Okay.
So I've had buyers who, let's say, put all cash, but their income is significantly lower, but they have no other recurring debt, and they have significant cash.
Mm-hmm.
They'll look at the entire package. And when we submit board packages, we always include a cover letter, right? Where we outline what the buyer's income is, what the buyer's total debt to income ratio is, what their reserves are. And on top of that, we'll actually tell the board this actually amounts to, let's say, 5 years of liquidity of reserves.
So cover letters, do you have like a standard out to everybody? It's like a template enough?
We do have a template, that my assistant sends out to the buyers to type up, but we do double check everything before it's submitted to the board, because you only get one chance. It's like a job interview, right? So our packages have to be perfect.
Now, do you ever, I know maybe not, but go to these co-op board meetings, or co-op boards, you never show up to them, or you let the agent?
They don't allow us in.
Not.
You mean the interviews?
Yeah. And you go to any of them? They don't allow you into any of them?
They won't allow us in. No, just the buyers.
Okay. But I know some agents always try to show up and carry the, their buyer's hand through the whole process. And
yeah, they're not getting in.
Okay. Good. Good to know. So don't go, guys. Don't bother. All right. I think that's something that I know co-ops is a lot. I know it's it may feel a lot, but I don't think if you break it down, it's not as crazy as people may seem.
No.
Especially after you realize the DTIs and how to work it and how to calculate it. The minimum income for people is usually 55 at most of these co-ops? Or is it right?
I mean, some buildings may have minimum incomes, but some, there are many that still don't have it. It's they rely on your debt to income ratio and reserves.
Okay. There's not that many 10% down co-ops anymore, right? I think Ali Khan is maybe the.
Yeah, the Howard Building also in Regal Park is one. But yeah, majority of them are 20%. There are some buildings in Forest Hills that's 30%, and even after the 30%, you have to have good reserves.
Now, I do see a lot of your listings that look renovated, look up to date. Are they having issues? I know co-ops have restrictions, right? Is it hard to get these things updated or so if a buyer's coming in and you could tell them, you could update this whole kitchen. Is that really realistic, or is it a pain in the butt to get this permits and everything else?
I don't think it's a pain in the butt. I think it's definitely realistic. As long as your contractor is fully licensed and insured, I think the board encourages renovations because you're upping their price per share.
Right. Okay.
Right, you're increasing their value, and all the board members are shareholders too, so they want prices to increase.
Okay. Now, regarding the price, I've heard, and I want to make sure we get the myths and the facts out, right? So, some boards will deny if it's too low of a price, just so they don't, they can stay close to their price points that they want, right? So
yeah, they do, and legally, I'm sure Arun could, speak about this as well, but legally they're not really allowed to do that. But they're protected. They don't have to disclose to us why the buyers are getting rejected.
Yeah, so I'll definitely ask Arun that, because I know, we never know why it gets rejected, right?
And I think Olga could also touch on this as well, on how to legally help with renovation credits and things like that. But if you are selling the property too low, you're definitely devaluing their price per share. So these board members, as shareholders, they're protecting the interest of all their shareholders who live in the building. So if you're devaluing their price per share, they can reject you.
Okay. I have a question here from your buddy Vincent. What would you suggest they offer presentation to in their offer presentation to co-ops?
My team is well trained on how to present an offer. So when we've seen agents, oh my goodness, where they're submitting offers for our listing, and it's the most frustrating thing because all they're giving us is an offer form and maybe a pre-approval letter. If we're even lucky, we get a pre-approval letter and nothing else. And then we have to tell them we need 2 years of tax returns. We need the last 2 pay stubs. We need your full credit report, and we need your bank statements, right? Showing how much liquid assets, and even if you have 401k and all of that, send that as well.
Yeah.
But if you're not breaking down your offer to show the agent how qualified your buyer is, that agent is going to automatically assume that this is going to be a nightmare transaction.
Yeah. And
right?
Especially that they're going to have to do all the work.
They're going to have to do all the work, or it's just you have no clue if your buyer is qualified. And we've trained our team members into presenting offers where the offer is being presented. They let the listing agent know what the total down payment is, what the buyer's 2018 income is, what's their 2019 income, what's their anticipated 2020 income, what their credit score is, what their recurring debt is, what their front-end debt-to-income ratio is, what their back-end debt-to-income ratio is, how much liquid assets you have, how much liquid assets you'll have after down payment and closing, and then how much in assets altogether you have after all said and done. So, 401ks, retirement.
Another long class. That's a class in itself. A
completely different class, yeah. But presenting your offer effectively will make a huge difference whether or not your buyers are approved or not, and or accepted or not. So I've had agents on my team telling me that their offer got accepted even though they're not the highest offer, but they were the most qualified or well-presented offer.
I think that's key because most listing agents don't want to, especially if they're not on both sides of the deal, do both sides of the work.
Yeah, there's a lot of hand-holding then, right? And you're qualifying and you're doing everything. You're putting together the package, and it gets difficult.
Yeah, I agree. All right. I definitely want to say thank you so much. Thank you for your time. I'm definitely going to have you on again for so much knowledge. I think we have to do a whole in-depth class of DTIs and everything else because even I need help on that stuff.
Sure, not a problem.
Thank you so much. And thank you, Lily. She has a great team. If you guys reach out to her, her information will be in follow her Instagram. Please put your Instagram on here as well, Lily. So please follow her Instagram. She has a lot of listings. Reach out to her team, showing agent, and I love it because we're a whole big family. So she's not. Before coming to EXP, it was really like I just saw her listings, right? But now it's like, all right, let me give her a call. Let me get in there, and it's so much better to be as a group, an alliance group, than just seeing her from afar.
Thank you.
Thank you so much. All right. So next up, we'll have Olga come up, and we'll have Olga just go over a little bit about the mortgage side of it and how that DTI and everything else calculations. Give me about 30 seconds, and we'll have Olga come in. Thank you, Lil.
You're welcome.
Good morning.
Olga, how you doing?
Yes. Good. Good morning, everybody.
Olga, I always say, you know what? Your smile always brings me the smile. You have a great feeling, great glow about you, Olga.
Thank you.
But if everybody doesn't know, Olga's has joined the home team with Freedom Mortgage. She's been with Freedom for a long time, but now she's with the home team. So now it makes it more in sync with everything we're doing. And she's always at for sales, always available. She's always has a lot of knowledge, not just about co-ops, but about a lot of different topics. I know you've been in this business a long time. Tell me.
15 years.
Yes. And tell me, I know you've done a lot of co-op deals, right?
Yes.
So what do you see? What's your biggest thing that you see agents are doing wrong or right?
So for us, what we do is, because we do so many co-ops, and we want to make sure that the co-op process closed, even if it's not seasoned agent, as soon as they give us a lead, we pre-approve them wearing a co-op hat. What does it mean? We look at the credit report to make sure it's not, we don't look at for pre-approval as a bank, because if the co-op will approve you, bank will approve you, because bank looks for debt to income ratio of 45%. Sometimes you could even push the envelope to 49%, while co-op needs 28. Bank don't care about you have 2 or 3 latenesses, as long as your credit score above 620. They'll still fund the loan. They'll penalize you with a higher rate, but they'll still close the loan. Also, we will look at the bank statement on a large deposit, and as long as it makes sense, we'll accept it. The gift only could come from family member, while some buildings will not accept the gift letter. So when I pre-approve a client, I do not do it as a bank. I do it as a co-op. I have a special sheet created. So when I speak with clients over the phone, before they even give me the documents, I plug in, well, what's your credit look like? Do you have any recurring debt? How much is your income? I'll calculate the debt to income ratio right on a pre-qual stage. I calculate how much money they need to close. And a lot of times they say, why do I need reserves? And we give them a worksheet with a need of documents and showing them how much assets they need to show. It's your down payment, closing cost, your 6 months reserves, co-op fees, approximately $1,500, and we put down your attorney $1,500. So they know upfront they need to have all that money. Usually I would put 6 months reserve, but I was kind of, challenged and said, no, put 1 year reserve. So now I changed my formulas to do 1 year reserves. It gives you a better flexibility as far as approval with a co-op. This year, even though we are so careful, for some reason this year we had the most rejection.
Really?
And it could be for different reasons, and the well-qualified clients. Now, we also look at when a client gets a contract, we also ask a realtor, oh, are you selling under the market? Because we know if it's sold under the market price, we're going to have an issue. As far as lending concerned, what is it different for co-op purchase versus a house purchase? Because you have an extra layer of approval. You have a layer approval for the clients, then you also have to approve the building. Not every building on a Fannie Mae guidelines. What does it mean? It means Chase, Citi, Wells Fargo, everyone will follow Fannie Mae guidelines. If Fannie Mae says, you know what, here's my parameters to approve the building. You have to have more than 50% owner occupied. You have to have a certain budget. Your financials have to be in order. Your insurance have to be in order. So if something is off, Freedom has ability to request Fannie Mae waiver. We also could finance through Citi, Chase, Wells, but if all the banks say no, we go to for a waiver. Now, what does a waiver looks like? In the past, Fannie Mae would give a waiver for the whole building. They would say, okay, the budget might not be 100%, but we're comfortable with the building. You could lend into the building. Now they changed it where they said, okay, the client's package is very strong. Even though the a little bit building is of our budget, we'll still lend in the building, but it's case by case basis.
Okay, so if a building is approved, so a lot of agents don't know that it's not just about your buyer being approved; it's the building itself.
Correct. The building have to be approved. We have a list. So a lot of times I encourage clients, call me. if you getting a listing of that building, let me know in advance. Why do you need to know in advance? We could request our co-op department to start working on the building approval. A lot of times, the management will not release updated questionnaire unless we have a contract, because it's a lot of work for them. We are willing to send the check up front. However, the management might not be willing to give us financials, budget, questionnaire, insurance, but we still have a, because such a big team, we do a lot of business on the co-op, so it might be already in the works. It's always good to know. There is a lot of buildings in
I think
Queens.
that's important, right? Because a lot of our, as a listing, if we have you guys at the open houses doing these with us, and people come with buyers that from a bank that not approved with the building, they could really just go to you guys. That's already approved.
Correct.
Right.
Correct.
We could shorten the time frame.
Absolutely. And also, let's say there is a building that Fannie Mae doesn't approve and doesn't give a waiver. We have investors that will finance in the building. However, it's not a 30-year mortgage. It's an ARM. It's still ability to do it while nobody else can do.
Yeah, I think that's the key. Is different ways to get the financing done. Especially at Freedom. I think they do a lot of co-ops. So them being a big presence in the co-op market, you don't have to worry about getting that building approved or not, right?
So we do both. So once we do not issue pre-approval unless we physically review all documents. If we see a red flag or a green flag, we alert the realtor and they'll say, listen, they will get the mortgage. However, the debt to income ratio is a little bit tight. The credit score is 740, but they have 5 latencies. Please check with the management to make sure there is not an issue. This will save you 3 months worth of work.
Yeah. And tell me about the questionnaire. I know a lot of people, I know some agents that brought the questionnaire themselves to the management company. Do you take the questionnaire, or what's the questionnaire? What's that even for?
Right. What we do is we try not to get involved realtors or clients unless it's absolutely necessary. We have a whole co-op department, a separate department that takes care of it. The minute we get a deal or we have a client, request for the co-op, we ask for our co-op department to start the process. In order to approve the building, what do we need? We need co-op questionnaire, 2 years financials, current budget, and we need a master insurance. Why is a questionnaire so important? I mean, every 4 of them important. If one doesn't work, then the whole approval is not going to work. But the questionnaire is needed for 2 purposes. Number 1, for appraisal, and number 2, for updated co-op building. The appraisal use questionnaire in order to put a lot of information in the appraisal report. They cannot finish appraisal report without the questionnaire. The questionnaires need to be updated. So we try to do our own request to the management, and sometimes management request funds for questionnaire. We will overnight. Sometimes we will overnight if it's necessary, or we'll send a check if it's only inquiry on the client's behalf, and then the fee will be picked up at closing. So we'll try to send a check to speed up the process.
How much
Sometimes,
is usually
go ahead.
How much is the questionnaire usually?
Questionnaire could range anywhere between $25 to $250.
Yeah.
Sometimes each management is a little different. And you know what the management do is a questionnaire gets filled in for appraisal. But then we need another questionnaire for co-op approval. So and the management will charge for both. So what we did one master questionnaire that covers both requirements.
That's good.
So that will speed up, it's definitely will speed up the process. It will do the request. Sometimes if the building do not fill in the W-9 form, that will allow us, that the form will give us opportunity to write it off as that it's not an expense. It's basically we upfront the cost, we will get it back. If they do not sign W-9 form, we cannot send the check. And in that cases, we'll request a client to send a check.
Okay. So I know it's really big for agents to learn the DTI and all that stuff, but
Yes.
And Lily has it down packed and has her team on point. But for new agents, do you help them?
Absolutely. We do the classes, and I have the whole training materials ready because Lily is very busy to train, and I'm willing to train anybody and everybody, whether it's her team or other people that want to learn. And what we do is we do quizzes during the day. So let's say I do the class, and I work in the office. So if I see a realtor pass by, I said, okay, take 2 minutes quiz. I send them the quiz, they could do it, and then we review it, because a lot of times it's good when you do the quiz on the real paperwork.
Yeah.
And it makes a huge difference. And now let's say if you have anybody wants to learn, you could reach out to me. I could do it like from Zoom. It's awesome. And it's easy. It's easy to learn, but it's very complicated. It's such an easy process where what's a debt to income ratio? It's total debt divided into total income. But the whole process to calculate what goes into the debt and how do you calculate the income, because a lot of people get paid differently.
Okay. So, I do thank you, because I wanted you up here because I know you have a wealth of knowledge, and I know you even give different flyers out, right?
Yes.
For agents.
What we did is we created a co-op flyer, step by step, how the flyer works. I mean, how the co-op purchase works. So, and we could co-brand that with everybody, or you could just send my flyer without co-branding.
Okay. So I think I have that just so we could see it. Yes. Something like this, right?
Yep. The other thing I want to tell you, one more thing before I could go, about recognition agreements. Very, very important. When we do the process of financing co-op, bank attorney sends recognition agreements. Recognition agreement is agreement between the bank and the management. An agreement that if any latenesses occur, they have to tell each other. But that recognition agreement have to be signed by 3 parties. Bank first, then a client, then a co-op. A lot of times those agreements get lost before the closing comes in. You cannot close without that agreement. So it's very important for realtors to know if the recognition agreement comes with a board package or it have to be sent to somewhere else. Make sure you follow with that, because a lot of times clients have it and they forget that they have it. Like I got a call today, say, oh, we're closing on Monday, but they can't find recognition agreements. And the problem will be is you will not close without it. And it takes time for a bank to create a recognition agreement. So it's extremely important that recognition agreements taken very seriously.
I think, like I said, it's definitely have to be a whole class, whole hour of breaking it down, each segment.
Yes.
I'm doing it justice having you guys all at one time, but I wanted everybody to see the knowledge and the content the group has, and that especially now is the time to reach out to everybody so we could educate each other, get content, get learning. This is the time that we do all our learning virtually, so space, giving that space to everybody. In this market, this new changing, do you see it harder, easier? What's going on with reaching out to you, business wise, closing wise?
So far we're still closing. Freedom is working. Everybody's working from home, but the bank attorney is working. Monday we have a scheduled closing. For the refinances, we're closing in their houses. So this way it's less people, and the closer goes to the house and close it. If it's a co-op, I used to come to all closings, but we were told them not to come, as little people as possible, but the bank attorneys are still closing. Now, is there going to be delays? We're definitely going to feel the delay within a week to 2, because if the management office is closed, we might have a later response. So we ask everybody just to be patient. The business will work. Everybody is working, but it might be delays. It could be delays on a lot of different sides of the business because you have a lot of moving parts.
Yeah, and I think even now with people, sometimes they want to feel connected. We could have a Zoom call with our client or buyer, right? A buyer with you, and so they could do that way.
If people like I have an older generation where they don't have a scanner, I had yesterday they took pictures, 45 pages, and it's harder for us. But listen, I would take that meeting with somebody and potentially get sick. So I had them take pictures and send me 45 pages of the pictures in a WhatsApp, and then I translated to my
That works, right? As long as we get the paperwork.
To my business account. If they don't have on a computer, we do FaceTime or WhatsApp or FaceTime on a smartphone. We're still working.
Okay, good stuff. Good stuff.
We are working people, still helping them to be a homeowner.
All right, sounds good. Thank you so much, Olga. I thank you for your time. And like I said, anybody reach out to Olga. Her number's on the bottom. Message her, text her. Definitely, she has a wealth of knowledge. She's never said no to me. Every time I've asked her a question, she never said no. She's never ran away. She's always helped me.
I'm not going anywhere.
Good. That's good to know. And we'll definitely have more classes. And guys, definitely comment. Let me know what classes you want us to do. We have a couple of things set up for next week, but moving forward, we want to try to get this content to you guys on a regular basis. So please let me know what you want to hear, and so we could have it lined up for you guys. All right. Again, Olga, thank you so much.
Thank
you. We'll have Arun up next. Give me another 30 seconds, and I'll bring Arun in, and so we'll finish off with the attorney specialist that we have, and go from there. Thank you, guys. Arun, my friend, how you doing?
Hey, buddy, how you doing?
Good to see you.
Same here.
I saw you yesterday, but good to see you again. If nobody knows, Arun is an attorney, has an office on Queens Boulevard. Even though we're not going to the offices, but he's always working. I did a closing yesterday. We had a meeting yesterday, so it's always productive. We're still churning, still moving forward. I actually have a deal currently with him as a co-op deal with him as well, which gave us some craziness, right? The other day, we found out some craziness with that deal.
Well, happens,
right? Just a little background. Our seller passed away a couple of days ago, and so now our buyer has to wait extra long time, right? Because we're on the buyer side and courts are closed, so it's probate. But things happen, right?
And if Olga's still around, I just want to give her some news. The governor just announced business is being suspended as of 8 p.m. tomorrow, other than essential services.
Essential services.
So
well, hopefully we're essential. I feel like I am. Arun, tell me, you've been doing calls for a long time. You've known our group for a long time. What do you see that agents are just misled about? They miss.
Well, I mean, co-ops are a great specialty if an agent, becomes good at it, because you can get a large volume of listings and large volume of sales in New York City. 80 to 90% of our stock is co-ops and the condos, and very few single-family homes. So the agents who are good are generally detail-oriented, who are good at marketing, but also good at the technicalities. Such as what does the co-op need? What are the co-op requirements in their applications?
So be organized, right?
Be organized. Be detail-oriented. Be ready to accept understanding the math behind the numbers.
Yeah, that DTI again, right?
And then finding good qualified buyers. Some of them are aware of what the boards will generally like. Some of them can package a good co-op application where others don't even know how to put it together. And that really differentiates, and you'll see that in the productivity of each agent.
Yeah, I think it's important not to just detail oriented, but have a great team behind you, from you, from people, especially if it's your first or second time going through it, using the resources, right? Because
absolutely, you need to
start off knowing everything. But if the people around you have their experience, then we'll get there.
Right. Yeah.
So,
absolutely.
What are you asking people? What are you asking about? What are you getting from after you're in contract? What are you actually on the buyer side? What are you telling people that we should get? Should we get it? Should you get it?
Well, so normally a good agent will, when they get a listing, meet with the client and get all the details that they need. So what is a good thing to get? A good thing to get is a copy of the stock certificate, right? You want to know who's the actual owner of the unit. Unless you have the stock certificate, you kind of don't know. You want to know how they took ownership. Did they take it as joint tenants or tenants in common? You want to ask them for a copy of their maintenance bill. Why? Oftentimes people don't know what the right amount of maintenance they're paying is because they may be getting a star rebate. So they're paying a lower maintenance. So, the buyer is not going to get that. So they have to tell the actual maintenance amount. So until you get the maintenance bill, it's kind of hard to do. So that kind of stuff, a good agent will typically ask for and look for.
So if they don't have the stocks, can they request it from the management before they're in contract, or they just have to wait until they're in contract to get those stocks?
No, they can always get a copy from the management. The management has a copy. They can even get it from their bank. If they have a loan with a bank, the bank will give them a copy because the bank is probably holding on to the original.
Yes.
So that's another way to get it. Sometimes they'll get it from their own documents. And sometimes if they have connections with their previous attorney who helped them buy, he may have a copy or she may have a copy.
Okay. Now, we were talking about maintenance before with Lily and how much is tax deductible and all this other stuff. Not knowing how much is what, where do we find that? Do we find that in the financials, stock certificates, or just the maintenance bill that they paid out? Will it break it down there?
Well, no. You won't find it in those documents. Generally, in January, each co-op will send a letter out to their shareholders telling them that this amount of each share is going to be deductible. So they'll say, for example, $4 per share is deductible as real estate taxes. If you have 48 shares in a co-op, you take that $4 multiplied by 48. That's your deduction. So you typically get that by the end of January from the co-op.
Okay. Now on the listing side, can we request that as well?
You can, and it's not a bad thing to do because when you're talking to buyers, it's a good marketing point. It's one of the things I mention when I meet with the clients that a significant portion of your maintenance is going to be deductible. So that's a big tax advantage. 30 to 40% of what you're paying, you get to take off on your taxes. Plus, you get to take off your own mortgage interest as well on the mortgage that you take.
Yeah, so especially when maintenance is high, it's you could say, oh well, a lot of it's because of the tax portion, not because of the building portion, right?
Well, so it's tax portion plus if the building itself has a mortgage, the interest on that mortgage is also deductible, right? Okay. So you get a second deduction on your maintenance. And then you have your own mortgage interest. So there's plenty of deductions to be had. And having that letter, it's good piece of information to give to the buyer.
Especially when most people are not doing it, right? So you have three apartments, one building, and or three in the same neighborhood. You have a little different edge when your buyer's coming in. Right?
That's correct. That's correct. So, and it shows that you're, detail oriented. It shows that you have all the facts in front of you. It's good to have.
Now, do you see when you get in financials, what are you looking for? What do we, we request financials. You get financials 2 years, or is it something that's alarming? Are you like, all right, let me just get it to have it? What's your purpose?
Well, no, I actually reviewed the financials in every deal with my client. We typically ask for 2 to 3 years, sometimes a little more. What we're looking for is what amount of reserves the co-op has, depending on the size. You know, if co-op has 3,000 units, the reserves will be significantly larger than a co-op that's 4 units in Queens. So that's one of the things we look for. What are the reserves they have? We look to see the cash flow. How much did they take in? How much did they spend? We want to, see that they're not overspending. We want to see that they're also not over collecting. If they're collecting way too much, then it's actually money from your pocket that's going into the co-op's pocket, and you'd rather keep it in your pocket. So those are some of the things we look for. Sometimes we'll see bad financials, but that's also not always a disqualifying factor, because we may see that the co-op has been improving over the last few years and it's on an improving trajectory. If that's the case, if the buyer is getting a good deal, then it might be a good investment.
Yeah. For example, for our deal, right, we're in at a good price point, and yes, our buyer's gonna have to wait out a little bit before ownership changes, but you know what? Let's wait it out so we could continue having a good deal, right?
Right. So patience will pay.
Yeah, exactly. So how are you doing business in this market right now?
Well, we have very, very few closings taking place. Where the closings are taking place, generally just attorneys are there with their clients. People who are not necessary for the closing aspect are generally not attending, sometimes from their own free will. A lot of the contracts we're signing digitally. We're emailing to our clients. They're signing and sending it back to us. So we're doing it that way. We're having phone conferences with our clients. But
contract signing digitally? You getting contract signed digitally?
In some cases digitally. In some cases they print it, sign it, and fax it back to us. So both, whatever is convenient for the clients.
Okay.
But the reality is that new contracts are going to slow down now because open houses are slowing down.
Yeah.
Right.
Yeah. So, open houses, jobs are slowing down. People occupations, right? What about people that are in contract? Are you having, getting them out of contract or a way out or losing their jobs? How difficult is the same process, co-op wise, residential wise, same thing?
Well, fortunately, we haven't had too many of those yet, but I could see that happening very soon. I think people will use prudence. What's going to happen is, in more cases than not, people will learn to have to be patient and do the right thing. If someone loses their job because of what's happening around us, what do you really do? I mean, you're gonna really punish the buyer for that? It's going to have to be wait and see approach. I think in many cases the co-ops will probably not entertain that buyer, someone who's lost their job, so we'll have a co-op rejection. But the question is going to be
the co-op rejections. If I get a, because a lot of times when you get a commitment letter on residential, you're pretty much locked in, right? It's like if you say no now, you kind of, it's hard to get your money back, right? Yes or no, right?
Well, not in every case. I mean, in some cases we have clauses that if the buyer loses their job or
after that
loses financing or funding due to not their acts or omissions, they can get their money back. So there becomes a legal question, whether they're losing a job because of coronavirus's result of their act or omission.
But for example, if so co-op deals, if the co-op board denies them, it's usually within that contract for them to get their reimbursement of their down payment.
Sure.
Just minus every application fee that they're going into, right? Application fee, questionnaire, all those things it's always paid out, and nothing of that gets refunded.
That's right. Those are non-refundable.
Non-refundable. Okay. Now on co-ops, do you see anything procuring like that would really stop people from, like, a lot of people may not want to, I may not want to live in a co-op, right? Too many people close proximities. Would that be enough reason for me to get out and get my money back?
Generally not. That's not going to be sufficient. I mean, you entered into a contract knowing what a co-op is, right? You typically know what a building looks like and that you're going to be living in close proximity. So that's not going to be sufficient to get out of the contract.
Okay. So I want people to know that, it's really in the same lines as residential, a lot of it, right? It's just more details that you're getting. It's actually more work on your end, right? To do these co-ops, getting financials and stuff like that, doing your due diligence to make sure the buildings is financial stable, right?
That's right.
And on the buyer side, really much make sure they're coming in with the correct amount reserves, as we heard from Lily, having the reserves, Olga as well, and really giving them a heads up. If everybody's on the same page, saying, giving the right information, the buyer should be going in fully aware of what they're getting themselves into.
That's correct.
So by the time they're sitting in contracts with you, everybody has made them fully aware of what they're in and how to get out.
That's right. So generally, look, if your mortgage is rejected, you get you get out. If the board rejects you, get out. If you lost your job because of the coronavirus, I can't imagine any co-op approving. And a lot of people will be able to use that to get out.
And closing wise, what's your time frame usually after the board approves?
Generally, I would say in less than 30 days, 15 to 30 days. Depends on, how quickly the board gets the documents to their attorney, to their transfer agent. You should be able to get it done.
Yeah, because a lot of agents seem, all right, board approved, they think they're closing next week. And usually not.
Usually not, and definitely in this environment, it's going to take a little longer.
Even more so, right?
Right. Absolutely.
Okay. Well, Vincent as well, promoting as well. Thank you, Vince.
Thank you, Vincent.
So tell me, any lasting words for everybody regarding co-ops or even in general working in this environment? What's your advice?
Well, look, I mean, co-ops are a good first home to buy. They're generally a lot cheaper than buying a single family home or a condo. You get a lot of deductions. You get, a portion of your maintenance is deducted, portion of your own mortgage interest is deducted. So it's generally a good starter home for a lot of young professionals. It's also good for a lot of elderly people, people who are downsizing. Why? Because they're able to use a lot of the deductions from there. And working in this environment, I mean, it's tough for everyone. But look, if you slog it out, you're going to get values here, and that's the name of the game.
Yeah, definitely. I agree. Guys, his information is on the bottom. Definitely reach out to Arun. Like I said, I don't put anybody in these trainings that I don't respect or use or consider part of the team. Please reach out to any of these distinguished people out over here, and they'll help you. They'll answer your questions, and knowledge is key, right? So having a good team around you, like I said, I may be the dumbest person in the room, but I'm gonna have a bunch of people around me that knows what they're doing, right? And that's always been my food of thought. So Arun, thank you so much.
You're welcome. I'm accessible. Anyone has questions, shoot me an email. While we're in a lockdown, I'll be answering questions via email for everyone.
Okay, thank you guys so much. And we're going to have some trainings next week. I'll put it in the comment section. I believe Monday we have one with Scott Advisor on Monday at 2. And next week we'll have another one at 11, same 11 a.m. on Friday. Not sure about the topic. We're trying to do a commercial one that we posted planned last week. So we're going to try to keep doing these trainings, these content, just to give you guys something to watch, to get informed about, whether it be myself, Vincent, or somebody part of the team. We're going to keep it going, really to give enough food for thought so you guys don't just get bored crazy watching the news and everything else. Don't get crazy out there. All right. Thank you, guys. Thank you, everybody, for being here. Lil, thank you.
You're welcome.
Olga, thank you so much.
Thank you. Stay safe.
Appreciate you guys. You guys have a good one.
All right, guys. Stay safe.
Bye.
Bye.